The US election is now just 11 days away, so where are investors placing their money? Well, here to answer that question is Wei Li, Head of Investment Strategy at EMEA, iShares, BlackRock. Thanks for coming in. What are you seeing in terms of flows at the moment?
I think something that is really interesting to note is that after Brexit referendum, interests into US equities have really started to pick up. But more recently, we're seeing inflows starting to decrease in magnitude and also becoming a bit more volatile. And one way of interpreting that would be that investors are getting a bit concerned in terms of the risks going into US election and have been a bit more reluctant to put money to US equity market.
Have you seen a change as time has gone on, as we've neared the election?
I think the fact that magnitude of inflows have been decreasing definitely is one of the changes that we have seen. With regards to what have been driving flows, I think other factors are also at work. If you think about what happened to US rates and just general curve steepening, not only in the US but also in Europe as well, that has been driving some outflows from long-dated treasuries and long-dated government bonds, and also to a less extent some outflows from the front end as well. So definitely a sense of caution, but not only driven by US election.
In regards to the US election and the markets around it, what has been sort of signalled so far, do you feel, in terms of the markets?
In terms of signal, I think when polls were very, very tight a few weeks ago, we actually saw investors kind of getting a bit reluctant in terms of going into emerging market, for example. But now pace starts to pick up, also because the differences kind of in polls have widened a little bit. And in terms of asset class performance, what we have seen really, really remarkable is that emerging market assets have been holding up very well versus their developed market counterpart. And if you think about what happened for the last few weeks since we came back from summer, since beginning of September, dollar gently strengthened, and there has been more significant moves in the rates market. Normally in that kind of environment, you would think that emerging market wouldn't hold up quite so well, but they have done really, really quite well. And if you think about some of the risks that have been posed by US election outcomes, specifically with some of the rhetoric from Mr. Trump around kind of anti-trade and potentially reversal of the trend of globalization, that could really pose risks for emerging market performance in the long term. But the fact that EM have held up and flows have been unabated, it really goes to show that other drivers are at work, at play, absolutely, in terms of investors putting money to work.
And that's kind of the regional play that you're seeing. What about the sector play? Of course, you know, we've talked in this series a lot about the impact on energy, the impact on healthcare, and we've seen moves in M&A. What are you seeing in flows in terms of that at the moment?
Absolutely. So it's really interesting because if you think about what markets have been doing since we came back from summer, it's a bit of a holding pattern, but within that, sector performance have varied very greatly, and also in terms of the flows, we have also seen very different performance as well. So sectors such as banks, such as healthcare, that could potentially go under a bit more pressure in terms of regulatory pressure, and also some of the kind of outlook for profitability could come under pressure. We have seen net outflows coming back from summer for these sectors, specifically kind of going into US election. But other sectors such as REITs, for example, we have actually seen inflows, and that has been largely also result of underlying fundamental drivers, although the pace of inflow have slowed down somewhat more recently because of the rates moves. So you do see US elections having more significant impact in terms of the single sectors that could be singled out based on kind of the different scenarios for regulations, but at the same time you also see larger drivers kind of dominating flows into sectors that are not likely to be specifically impacted by the election outcome, but the macro factors such as what's happening to rates, what's happening to credit.
We're talking about that caution leading up to the election itself, but going on from there, do we expect to see continued caution for a while till there's a real understanding of whatever the outcome actually means?
Actually, I think it would be interesting to kind of draw the parallel between what happened with Brexit and the US election, because what happened with Brexit is that we had an outcome that was arguably not market friendly, and then investors came back the morning after, kind of looked at what happened and went on to deploy cash anyway. So are we going to see the same, given the fact that there are still lots of cash on the sideline? We could, because once we have kind of the uncertainty out of the way, we could see investors starting to kind of bring the cash levels down a little bit from record levels. In terms of gauging the sense of caution, one very interesting thing that we have been paying a lot of attention to more recently is the VIX futures. VIX is the implied volatility of the US equity market. VIX future has been quite steep more recently, and that means that investors are expecting the kind of further down the line volatility to pick up, right? So one of the very more popular trades to pick up additional yield is to sell VIX futures further down the line, and as volatility kind of gets realized at a lower level, which is what we have seen so far, volatility haven't really spiked significantly. So as volatility gets realized at a lower level, and VIX future you have already sold it at a higher level, you pick up this roll down yield, right? So that's some trade that investors have been quite interested in. But short positions for VIX futures have decreased a lot compared with the close to record highs during summer. And what does that mean? It means that even though the pickup yield, this trade, the rationale for this trade is still very much in place, investors are now expecting volatility to be realized at a higher level. And that is, in our point of view, one of the strongest evidence of there being caution in place going into the US election.
So evidence of caution is the VIX, but also a trade to be watching.
Yes, absolutely.
Thanks very much, Wei Li there from iShares, EMEA, BlackRock.